Now gold, I think gold is right now presenting, I wouldn't say once in a lifetime opportunity, but it's definitely presenting once in a many years opportunity right now. Okay, I did a sharing last weekend. Okay, I'm not sure some of you perhaps managed to catch that event. I did talk a little bit about gold here during that event as well, and I thought I would like to cover this today also, so that to benefit those of you who perhaps did not, sit into that event over the weekend, right? Now, there are a couple of perspective and approach that I look into gold. Okay, of course, we have the very technical analysis perspective. We have the seasonality analysis approach on gold. Okay, of course, we also would have the potential fundamental / macro perspective. And over here, okay, I want to talk about a couple of this to give you that idea of why I say gold right now is one trade that you definitely want to have it in your list, right? I mean, if today you are not actively trading on gold, I would still suggest start looking at it. I mean, I'm not someone who trades actively on gold. Yes, I do look into GLD, which is an ETF of it, and I do long-term investment. But I think right now, with what we are seeing on gold market, it's something that even I decided to, trade it. Okay, so I think it's something that I'm very convicted into, and the upside is huge. Okay, and I just want to add in here COT report. Okay, which I personally categorize that as sentiment. Okay, so first up, let's talk about the technical elements of gold. Right, this is on the daily scale. What we have over here, you can see, is that we are actually at the bottom. Okay, and this bottom is actually significant because if it goes all the way back, if you want, you can put it even here, March 2020, right? This one here is due in 2020, so it stretches all the way back to it stretches back to like 2 years, right? Kind of skip me. Okay, so yeah, 2020, right? So it's kind of 2 years back, right? And this level is actually very significant. And you can see many times it came back, it did not really break through. And we are here, right, close to the bottom of it. Okay, so from a technical support level, that's a very key level. And if you take a look at the top, we have that resistance here, which was established in August 2020, and another time here in March this year. Okay, so this leaves us to at least this kind of upside, right, which is already very interesting because we are trading somewhere around 1720, and this is all the way until 2060. Okay, couple of $100 and couple of $100 on a trade on gold is huge. Okay, and if I were to stretch this even further, right, you can see that if let's say this level here is able to be broken, the upside is gonna be almost uncapped and unlimited, right? And that's something that I thought definitely very attractive right now, because we are looking at the trade from the angle of somewhere near the bottom. Okay, so that's a simple technical analysis on the higher time frame perspective. Okay, now so that's the TA side, right? We have upside, huge opportunity. I want to talk a little bit about the seasonality over here as well. This period all the way until closer towards the end of the year, until next year February, is usually a good season for precious metal, right? Of course, that includes like gold, silver, platinum. Okay, so the seasonality right now is also siding on the upside, right? It's kind of contributing and adding to the odds, the probability of the upside. Okay, so seasonality, in short, is a study of historical pattern for the past 10 years during this period of time. How many years it rallied, how many years it did not. And if let's say, for the past 10 years, we have 8 years that gold rally during this period, then we have an 80% probability this year it might happen. Okay, so seasonality analysis is about that. And then we have the fundamental and macro, right? So over here, if you take a look at back in 2008, Okay, of course we are not exactly there. I mean, in terms of like events happening in 2008 and now, it's not the same. But what happened in 2008 is we kind of had a major recession, right? Now we are talking about, are we gonna see a recession next year, right? Because if the Fed keeps hiking rate, it's gonna affect the economy, it's gonna pull the economy down, and we are now in a stagflation economy, which means growth in the economy is not good, but inflation is high. So if the Fed increase rates, then the economy is really not growing, and we might go into a recession maybe as early as next year, right? And if you look back at the previous more major recession, right? I mean, 2020 where we have COVID pandemic, it's not really a recession, it's just a lockdown, and then very quickly we get out of it. Okay, but if you go back to like 2008, 2009, that's where really the financial market crash, bank collapses, and then we go into a deep recession. Okay, what happens after that is we have a very huge rally on gold, right? And from a macro and fundamental perspective, that's where I look at it and say that, what if this happens here as well? Okay, where we have this little push, we have this, you know, sideways move, but it's not really that deep of a consolidation, but it's still similar nature. And what happens if we have this next move? Okay, so from that angle, we want to capitalize on it too. Okay, and the last element over here is interesting because we look into COT, which stands for Commitment of Traders Report. Okay, and that's actually a study of the futures market in terms of the large speculators, right? Your hedge funds, your fund managers, what is their positioning on gold futures? Okay, and that can give you a clue as to where the market sentiment is right now. Okay, in COT report itself, there's one element called the Cot Index, and it's basically a study of extreme zones, right? So think of it as, in gold, okay, there are traders buying and selling, right? And if every trader right now is selling gold, okay, and everyone who wants to sell gold has sold gold, then the only way next moving forward is that the opposite direction. You get me, right? So I mean, it's like the worst case scenario is down already, right? So down, everyone wants to sell, is already selling it. Nobody is interested in selling anymore. Then the next possible move is only left for buyers to come in and buy gold back up, right? Or seller starts to take profit, which is also equivalent to buy. Okay, so that's the study of COT in a very simplified version. And right now, the COT report for gold is telling us that we are in a very extreme territory, okay? And that kind of tells you that everyone who wants to sell gold has already sold it. Okay, and there is not many buyers in the gold market yet. Now think of it this way, where if today people starts to buy it back up, there is a lot of upside for people to come in the buy side of gold market, but the sell side isn't much room left, right? Because everyone already wants to sell, has been selling in the market. So that gives you that very huge potential on the reversal side of things. Okay, so this is the part where coming from different angle, all of them are telling me, at least, okay, that this trade on gold to the upside is a huge opportunity and huge probability trade. Okay, and that's the part where I'm very convicted to this trade. But having said that, I'm not saying that you go all in, but convicted meaning is a trade that I will put it as trade of the year. Okay, and if you still remember 2-3 weeks or even 1 month back, right, we talked about Euro Odd. I told you that this is like one of the trade of the month, right? And gold here, I would put it as a category of trade of the year. Okay, so a very simple one. Okay, with all that said, right, what I want to share with you all this is to give you the idea of where my conviction comes from, but that does not mean you need to overcomplicate your entry. Okay, so what's the entry? The entry is basically pull fit, swing high to swing low, look for a retracement, of a corrective pattern. Okay, enter there, put your stop there. That's it. Okay. Now I'm not gonna put a target. I'm gonna leave my take profit open. Okay. Why? Because just now I mentioned from a higher time frame perspective, this can really go upside and it might be uncapped. Okay. So I'm not gonna have a take profit. I'm gonna have a stop for sure. Okay, and it's about $30 stop. Okay, in gold, right? So you need to go and do your own calculation based on the $30 stop. What is your lot size to be entering and things like that, right? $30 doesn't mean I risk $30. $30 on gold means, you know, the entry is somewhere around 1710. Your stop loss is around 1680. Okay, so that price difference is $30. Okay. Yeah. Okay, so that's the plan. Okay, and the idea here is whenever it gives me a next opportunity to enter or buy again, I will take it and I'll keep scaling in all the way until it's nearer to the top over here. Okay, I mean here I scale in, the upside is still huge, right? Even at the midpoint here, if I scale in, the upside is still huge, right? I mean when price reaches here, I will not be scaling in anymore. But by the time it reaches there, I think all of us will be very happy. Okay. Yeah, so this is gold. I just want to spend a little bit more time to talk about it to show you the whole process of where the conviction level comes from, why I'm really paying attention to that. Okay. So yeah, that's the perspective on gold. Okay. But having said all this, please still manage your risk. Don't go all in. If you are convinced of this analysis, you also have strong conviction on gold, you can increase your risk a little bit to be a little bit more aggressive, but never go all in. Yeah. Okay, so that's the idea on it.